Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit more technical analysis on Bitcoin because, as you guys can see, over the last 24 hours or so, ever since we recorded yesterday's video, some interesting movements have happened on Bitcoin. You guys obviously saw where Bitcoin ran all the way up here to $9,100, and while that was happening, I was concerned that Bitcoin was going to run out of steam. I didn't think that the bulls had it in them to have a run like that, and lo and behold, the Bitcoin bulls did eventually fail. Bitcoin crashed over $1,000, $1,200 from $9,100 all the way down here to around $7,900, a 12% drop. Major move on Bitcoin. We're finally having something interesting go on Bitcoin. The last time we saw something really all that interesting was right back over here. But in today's video, I want to discuss whether or not this is actually the beginning of a new downtrend in Bitcoin, because ironically, and this was complete coincidence, I promise you, this was not me being a genius or anything, it was complete coincidence that yesterday we were talking about how Bitcoin was more than likely going to have a downtrend forming in the next couple of weeks, probably in the month of June or July, and that we were going to see an end to the rally that we're in. Is this the beginning of the end for Bitcoin's rally? Is this the beginning of a new downtrend on the cryptocurrency? What is Bitcoin about to do? Is it about to reverse, bounce? Is it about to crash? We're going to be discussing all of that and more in today's video, guys. So if you do enjoy today's video, smash that like button. You guys know what I'll tell you to do to the like button. I really ought to belong in jail or in a courtroom for what I tell you to do to that like button. Go down there, smash the like button, throw it up against a wall. I don't know what you want to do with it. Whatever, be creative. Hit that like button. Make sure you hit that subscribe bell and notification bell as well. Subscribe button and notification bell as well. But without much further ado, guys, let's go ahead and get right on into it. I lied. Actually, there will be a little bit more further ado. Remember that the Cryptocurrency Technical Analysis Academy sale is going on May 2019, and I have the official launch date for the new price for the Cryptocurrency Technical Analysis Academy. It will be June the 3rd, which is next Monday. On that day, the price of the course will be rising from $149 to $199, which means you have 3 days to get into the course before the price rises, and you will never see this discount again. Now, actually, without much further ado, let's go ahead and dive right on into it, guys, because there's a lot that we need to get to in today's video. I want to go ahead and do a little bit of analysis on what's happened here over the last couple of hours, over the last couple of days, and then we're going to zoom out and do some longer-term TA and talk about why this is important, why it's a decision point, why it's a turning point potentially, what kind of confirmations we're looking for, all that stuff, guys. We have a lot to get to. The first thing I want to point out is that, yes, Bitcoin did rally here bullish, but immediately we were rejected by the bulls. And a lot of times what you'll see in technical analysis, I did not mean to draw that trend line. What a lot of times you'll see in technical analysis is that the bulls will make a move or the bears will make a move, and then that move will get countered by the other party, by the other faction, by the other whatever, by the Democrats counter the Republicans. It's that kind of thing. The bulls will have a move, and then the bears will have a move to show their strength. Let me ask you something. How large was the bullish move in comparison to the bearish move? The bullish move was about 4.5%. The bearish move was about 12%. And that's something that I think a lot of people are going to overlook. The fact that the bulls had a move and then they got rejected. But instead of the bulls retaining some of that ground that they made and then Bitcoin hovering up around $8,900 or something, the bulls had a move. And from there, Bitcoin crashed far below where it started that move, which meant that right back over here, there was a lot of tension in the market and there was an inequality between the bulls and the bears. This meant that when Bitcoin was trading right here, Bitcoin was not worth this. Bitcoin was actually worth what it is down here, because after we saw a move, after we saw a catalyst, Bitcoin crashed. We didn't see Bitcoin rally 4% and then pull back 1%. We saw Bitcoin rally 4% and pull back nearly 13%. We had a $1,000 crash, and that's a very important piece of technical analysis to understand when we're trying to understand the differences between the bulls and the bears. In the Cryptocurrency Technical Analysis Academy, we have over 500 members of you guys by now, so I don't mind talking to you as my own separate entity of the audience. If you guys are in CT2A, come here to these two videos, gauging the strength of support and resistance, and especially gauging the strength of the bulls and the bears. That is a very important concept. Understanding when the bulls have a move and then the bears have the move, which one's stronger. That will give you a very solid understanding of the strength of the bulls and the bears. Keep that in mind. From there, guys, I do want to remind you that it's not all doom and gloom. This is on the hourly chart. Bitcoin's bulls are obviously weaker than the bears, at least in the shorter term, but I also want to point out right here that Bitcoin did form an inverse head and shoulders pattern, and at the time of recording this, Bitcoin actually seems to be moving to the upside. As you can see, the last 10 minutes or so have been rather bullish for Bitcoin. So I don't want to go and make any predictions that Bitcoin's going to crash in the short term. But the point I'm trying to make is that I think the bears are starting to get their momentum back. I think the bears are starting to take control of the market again. I think the bulls are losing a lot of their steam, and that would make makes sense, guys. We're on, what, day 112 of rally? Bitcoin is massively overdue for a correction. It has been looking for one for weeks, and I think we're going to finally see one in the next couple of weeks. It might not be now, but I think we're going to see one. Before we see a downtrend, I want to talk about confirmations of that downtrend. We're going to dive back into some more technical indicators afterwards. Bitcoin's 20 exponential moving average is one of the most important moving averages that you will find in Bitcoin technical analysis. Of course, there's also the 50 simple, the 200 simple, the 20 simple. There are other ones that are important, but this one is very important. That's the reason why there's an entire dedicated video to the 20 EMA and CT2A. There are videos on moving averages here, but the video on the 20 exponential moving average has a dedicated video. And the reason for that is because it's very powerful. One of the reasons I care so much about the 20 EMA is because it shows itself to be an indicator of long-term rallies and long-term downtrends on the daily chart, and shorter-term downtrends and shorter-term rallies on the shorter-term charts. On the hourly chart, for example, Bitcoin is just broken above the 20 exponential moving average at the time of recording this on the hourly chart. Bitcoin was testing resistance below this. This is actually a very bullish indicator for the next 12 to 24 hours or so on Bitcoin. But on the longer-term time frames, I want to point out that Bitcoin has come down here pretty close to the 20 EMA. Now, we've done that a lot. That's nothing to really worry about, but I do want you guys to understand that if Bitcoin breaks this 20 EMA, because the 20 EMA is going to continue moving something like that, if Bitcoin comes down here and breaks this 20 EMA, that's the end of the rally. That would be a confirmation of the end of the rally, especially if we could keep about 2 or 3 daily candlesticks below it. That would be confirmation of the end. So I'm not necessarily saying the new downtrend is starting now. We've seen a bit of a correction, but that does not mean that the downtrend is over. I'll call the downtrend over after we fall below the 20 EMA. All right, moving on. Another one that I want to look at, that would be the Heikin-Ashi candlesticks. If you guys are in CT2A, again, like I said, CT2A covers just about everything we do here on the channel. We have a video on how to read and use Heikin-Ashi candlestick charts. So I'm not going to get into in today's video about how exactly they're calculated or anything or what all of this means, but there are two things I want to point out. One is a little bit of Japanese candlestick analysis. This Heikin-Ashi candle is a spinning top. That shows indecision in the market, and if you know anything about the hierarchy of bullish, neutral, and bearishness, then you will know that neutral and indecisive is a lot more bearish than bullish. What do I mean by that? Bitcoin was obviously very bullish in all this time. If you know anything about Heikin-Ashi, you'll see all of these candlesticks without a wick below them. That indicates very strong bullishness for Bitcoin. So to see indecision and neutrality coming from the market in a spinning top like this does mean that Bitcoin is more bearish now than it was a couple weeks ago. Furthermore, this is the first time that we've seen Bitcoin turn red on the Heikin-Ashi in quite some time. We saw 2 red candlesticks over here. Those wound up being nothing. Bitcoin did rally. Is third time going to be the charm? We'll see, guys. We don't see an upper wick on this candlestick right here, and if you guys know anything about Heikin-Ashi, like I said, you will know that that is an important signal. You will know that when there's no upper wick or no lower wick, that does add strength to the color of the candlestick. Let me say that again. When there's no wick on the upper side of a red candlestick, that indicates stronger bearishness. When there's no wick on the bottom of a green candlestick, that indicates stronger bullishness. That's a very important distinction, one that sometimes people do overlook. So this doesn't really mean a whole lot just yet. It's an early warning sign in the same way that us pulling back down closer to the 20 exponential moving average is simply a warning sign. It's a warning sign that if we do stay red here and do continue moving to the downside, we may be seeing some kind of new downtrend exacerbate into a much longer term downtrend. Moving on from there are some things that I want to discuss out here on the weekly chart. One of them would have to do with the MACD, and the other would have to do with the stochastic RSI. As we can see here, guys, the way MACD reads on my chart, and of course, we do have a video on MACD and CT2A also, so I talk about all this in that video. When you guys see this candlestick right here, this color, I'm not even going to try to name that color. You guys know that I'm colorblind, and I will make myself look like a complete fool in front of thousands of people. So I'm just going to say this color. This color means that these two lines, the MACD line and the signal line, started moving closer together on this candlestick. And I bet you that if we look, then that's going to be a red candlestick. What do you know? It's a red candlestick. That is because these two lines start moving closer together. And of course, these two lines start having to converge. That's what the C in MACD stands for. Convergence and divergence, moving average, convergence, divergence. When these two lines start to converge, then that means that there's more likely to be a cross. And as you guys can see, we've seen nothing but divergence in the MACD for the last several months. Ever since back over here in December, early December, the MACD has been getting more and more and more and more and more bullish. Right here, we saw it getting more bearish for 1 week, and then we continue getting more bullish. These differently colored candlesticks mean that these two lines are spreading apart even more. And as you guys can see, Bitcoin was very bullish during this time. But in that time, Bitcoin rallied so very far that it kind of didn't leave itself a whole lot more room to run. It went ahead and basically sold to everyone that it could, and now there's no one left to buy because everybody's gone ahead and bought their Bitcoin. They've all got their bags. I'm speaking in metaphors here. I'm speaking theoretically here. Of course, there's more people to buy, but you kind of get what I'm saying. Bitcoin has gone and run to the moon, and so too has the MACD. And as you guys can see right here, this bar on the histogram is actually lower than the one before it, which means that the distance between these lines on this candlestick and these lines on this candlestick are actually shorter. This one is shorter than that one, which means that these two moving averages are, these two lines are converging on each other, and that does indicate that we might be seeing a cross in the future. And I want to point something out to you guys. The MACD, reading the crosses is actually the wrong way to read MACD. A lot of people think, oh, well, I read a cross, okay, well, let's use that. Well, that's useful, don't get me wrong, but that's an elementary way to look at MACD. The better way to look at MACD and the better way to look at a lot of these moving averages is to see when the momentum shifts, when you start seeing that convergence or divergence change. The right time to look at a MACD signal was not right here in February when the rally was just about to start, but it was actually back over here in December when we started seeing Bitcoin turn more and more bullish and we started to see these lines diverge in a bullish way. The time to read the signal was back over here, not over here. It just so happened that Bitcoin was trading around the same levels in these two instances, but a lot of times that won't be the case. A lot of times the cross will be the lagging indicator, and the change in the divergence of the two lines in the MACD calculation will be the predictive indicator. Keep that in mind. That's a very powerful thing for you to understand. A couple more things I want to discuss out here on the weekly chart have to do with the candlesticks themselves and the candle bodies. Guys, the last 4 weeks, the last month or so, pretty much the entire month of May and the later part of April have been nothing but green. Nothing but green, guys. They've been ridiculously green. Bitcoin saw green, grew bigger green, smaller green. Now we're seeing red. Remember what I said earlier about a spinning top? This is a spinning top. This shows indecision on the weekly chart as well as on the daily chart with the Heikin-Ashi. That doesn't necessarily mean that we're calling for a correction, but what that does mean is that we're seeing indecision in the market. And like I said, indecision is more bearishness than straight bullishness. That's just the way it is. It's a totem pole. You go bullish, and then if you drop one bullish step, you go to neutral, and if you drop one more bullish step, you go to bearish. It's like the rarity of your steak, the thing that you see on your menu when you go to Outback Steakhouse. That's what I'm talking about here. That's kind of what we're looking at. Bitcoin is more bearish now than it was a couple weeks ago, simply because we're seeing things like spinning tops and red candlesticks. It means that we don't have as much bullish power and exuberance and momentum as we did. One thing I also want to point out here is these candlesticks. Look at what happened on this candlestick right over here. Look at this candlestick. May 6th. What is striking to you about this? I think a lot of advanced technical analysts wouldn't see this either, so don't feel bad if you don't see what I'm talking about. Look at the wixes. I talk about this, I forget which video I talk about this in actually, but I do cover this in the course. Look at these wixes. Look at this upper wick right here. It's much larger than the lower wick on this green candlestick. Now instead, look at the last week's candlestick. Very small upper wick, very large lower wick. That's a bearish thing. That means that we went from bullish to less bullish to neutral, and you guys see where this pattern is going. The next thing we're going to have is medium rare, then rare, and then we're going to be bearish, and Bitcoin is going to be an undercooked steak. I have a friend of mine who likes a blue rare steak, so I guess he likes shorting because that means that Bitcoin's very bearish. Analogies aside, I think you guys understand the point I'm trying to make. Bitcoin, as time progresses, is getting less and less bullish. And that doesn't mean that the bull market is over. That doesn't mean that Bitcoin is doomed. That doesn't mean that Bitcoin is going to $3,000. It just does mean that this rally is running out of steam. And that might happen in a couple weeks from now. It might happen a month from now. But eventually, like I said, we're going to have a correction. One last technical indicator I want to talk about before we dive into where Bitcoin might go, because I know a lot of you guys wanted me to talk about that in yesterday's video, would be the stochastic RSI. Stochastic RSI has been sitting up here in overbought territory for a long time. I've always told you guys, just because stochastic RSI or RSI are overbought does not necessarily mean that you want to use that as a signal. You want to use the change in momentum in the same way that you do on the MACD. Well, we're starting to see that, guys. Stochastic RSI, and this might be short-lived. This might not mean anything yet, but keep an eye on it. Stochastic RSI is starting to curve to the downside a little bit. And if stochastic RSI starts curving down here towards like 80 or something, that's going to be a lagging indicator, albeit, but nevertheless an indication that we are seeing more bearishness coming into Bitcoin and its market. So, with all of those technical indicators out of the way, with all that TA out of the way, let's go ahead and try and make a prediction, a healthy prediction of where Bitcoin is going to head. Well, guys, I see two scenarios. I'd like to give you guys a couple different scenarios and percentages so that you guys can go ahead and do your own TA and alter what I say. I see a couple of scenarios. One, we see Bitcoin stay above the 20 exponential moving average and run to $10,000. That is very much a possibility, one that I don't want to write off. That very well may happen. In fact, I wouldn't really be all that surprised if that happened, so I'm not going to write that off. Don't think that I am. Just because I'm talking bearish scenarios does not mean that I think 100% that Bitcoin is going to crash. Bitcoin very well can come down here, bounce, and rally. We're seeing some more bearish early warning signs, but they're not bearish demanding indicators. These are not things that are demanding the market crash. They're just early warning signs. They're kind of little pokes at us, letting us know, hey Jeb, Hey, Jeb. Hey, Crypto Jeb. Hey, guys. Watch out. Bitcoin might have a bit of a correction pretty soon. That's all we're talking about here. These things might become important in the next couple of weeks, but right now they're not the end of the world. So we may see Bitcoin bounce here and rally up to 10K. Very possible. But I want to also talk about the next scenario, which is Bitcoin crashing, because I do think we're going to see one happen in the next couple of weeks, and I think it's going to be more severe than I think a lot of people are ready for. I see a lot of people talking about, oh, we're going to crash 10%, we're going to fall 15%, you know, it's not going to be that big a deal. We'll go back down to $8,000, or we'll go down to $7,500. I'm not convinced on that. I'll tell you guys where I think Bitcoin's going to go if we do actually break the 20 exponential moving average, because it's going to be lower than what you probably think I'm going to say. I think Bitcoin's going to come down here between $6,000 and $7,500. I don't know exactly where. It's hard to predict these things. We can look at moving averages and call some of them as levels of support. The 50 would be obviously one of them. That would give us support somewhere around $7,000 probably. Those are the kinds of levels of support we'll look at. It's not even really all that clear where Bitcoin would get levels of support, because it's not even all that clear if Bitcoin is going to crash at all yet. But the point I want to make is that you want to be careful, because Bitcoin, if it breaks that 20 exponential moving average, that's a very powerful indicator. If Bitcoin falls below that, that means that all the bullishness that it's had for the last 112 days is gone. That means that a new downtrend has started. We've seen what an uptrend can look like in Bitcoin, but we haven't seen a downtrend lately. We haven't seen what the bears can do. They've been waiting. They've been patiently awaiting for their time to start taking their profits and shorting. And you better believe it, that when Bitcoin does crash, they're going to go to town for a little while. It's probably going to be short-lived. There'll probably be less than a month of downtrend before Bitcoin starts rallying again. But they are going to have a little bit of fun. It's very possible that Bitcoin comes all the way back down to $6,000. And like I've said in other videos, by the way, I hope Bitcoin comes down to $6,000. Let Bitcoin crash to 6K, because everybody's going to buy Bitcoin. We're going to bounce off of there. Instead of starting a new rally from $3,000 and running to $10,000 or $9,000, we're going to start from $6,000 and run to like $15,000. So it's not a big deal if Bitcoin does that, but it is something you need to be aware of, because if you aren't aware of it and you trade it wrong, you can lose a whole lot of money. And guys, trading and losing a whole lot of money and, you know, not doing that is why I made the Cryptocurrency Technical Analysis Academy. Do you like that segue? Post segue in the comment section down below. This is why I made the Cryptocurrency Technical Analysis Academy. That's why I've been referencing it so much in this video, and that's why I've been forcing it down your throats for the last week, because I want you guys to join and learn about technical analysis so that you don't make the same mistakes that I see so many people making in the market. I'm going to use, I forgot your name. You were in the premiere yesterday. You admitted to it. Your name has the word arrow in it. Arrow Hunter 9. I don't remember what exactly your name is. You're the dude who said that you invested your life savings in Bitcoin and you made a bunch of money. Well, you know what? Don't be that guy. That dude made a whole lot of money, but guess what? If Bitcoin crashes, he just lost his life savings. That's not a good idea. Don't do that. That's the entire reason I made the Cryptocurrency Technical Analysis Academy, guys, is because I want you to learn how to do cryptocurrency technical analysis. That's why it's called the Cryptocurrency Technical Analysis Academy, because if you know how to read these markets, and if you know how to predict what these markets are going to do, and you understand why they move in the way that they do, guess what? You're going to have such a better understanding of the markets, and you're going to have such a better chance of actually making profitable trades and making profitable, smart, long-term investments. If you guys want to make money from this market, don't just go throw money at the market until you figure it out. Don't learn the hard way. Instead of investing thousands and thousands of dollars into Bitcoin or spending a year paper trading Bitcoin to try and learn how this market works, all you got to do is go down to the link in the description, use the coupon code May2019, get 20% off the course price, come through the course. There's 10 hours of content that boils down over 1,000 hours of research over the course of a year and a half that I've done to teach you guys how to read these markets, how to work in these markets, how to trade these markets, and most importantly, how to make money in these markets. If you want to learn how to work in these markets, go buy a course. You don't even have to buy mine. If you want to go buy someone else's course, if somebody else has a better course, go buy theirs, tell me about it, and I'll go in and I'll go and make sure that mine is the better one. Go do that. That's fine. I want you guys to do what's best for you. If you find a better course out there, take it. Tell me about it, and I'll make sure mine's the best, but go take the best opportunity that you have. I want you guys to be successful in this market. I want you to make money in this market, because I want to make money in this market, and I want what's best for you guys as well as what's best for me and the people around me as well. The best way to make money in this market is to know exactly what you're doing. I've always said, and I will say it till the day I die, that the best investment one can make is not one in any market. It's not in Forex, it's not in IPOs, it's not in penny stocks, it's not in Bitcoin, it's not in any other cryptocurrency, it's not in anything. The best investment that you can ever make is an investment in yourself. And yes, I'm saying that even though Bitcoin has run literally infinite percentage points over the last 10 years. I understand that. Bitcoin has had ridiculous returns. If you traded Bitcoin right over the last 10 years, you could be a billionaire right now. I get that. Still not as good of an investment as investing in yourself. Because if you invest in Bitcoin and you make $1 billion, but you don't have any idea how you did it, one, you're going to lose that money because you don't know what to do with $1 billion. And second of all, you're never going to be able to do it again because you got lucky. But if you know how to do it and you know how to replicate it, you can make as much money, you can make as big of an impact on the world as you possibly want. The sky is the limit if you have knowledge. Information is power. So guys, that is why I made the course. That is why I poured my heart and soul into it. That's why I put hundreds of hours into creating the course and thousands of hours into learning this market so that I could share with you guys the gospel of Bitcoin and cryptocurrency technical analysis so that we can all have our financial freedom and our Lamborghinis and champagne corks and Bugattis and 12 pretty girls in the 15-car garage and having duets with Nickelback or whatever you want. You guys can have it if you put them work into it. I'm not guaranteeing you that you're going to make a ton of money because you went through my course, but I will tell you that if you don't know the concepts in CT2A, even if you don't know only 20% of the concepts in here, it's going to help because these are proven things that help you learn how to trade the market. If you know these, you're going to be a lot better off than if you didn't. Put it that way. Anyway, guys, that's going to wrap it up for today's video. I do want to remind you guys, there are over 500 members in the Cryptocurrency Technical Analysis Academy now. We just passed that a couple days ago. I'll flash proof of that up on screen. We've had 197 people join this month, in the month of May. 197. I think it's 197. It might have been 196. But if I remember, I'll also flash proof of that up on screen. That's ridiculous. That's absurd. And I'm very proud of that. And you guys seem to be really enjoying CT2A. We've never had a single refund. We've never had a single request for a refund. I am very proud of that, and I don't mind saying it because we've made a good product here, and you guys are doing great things with the knowledge that you're learning. If you're in the Cryptocurrency Technical Analysis Academy, what I want you to do, go down to the comment section down below and tell people what you think. Like I've said in other videos, I don't want a good review. I don't want a bad review. I want an honest review. Tell me what you think. If you have a problem with the course, tell me in the comment section down below. I'll try to get it rectified if it's something that I can fix. If you have anything good to say about CT2A, say it. If you have anything bad to say about CT2A, say it. Let people see your honest reviews. I guarantee you that not a single one of those is me because I know someone's going to be in the comments saying, oh, well, Jeb, you're just on 20 different accounts saying that. I don't need to say that. You guys joined the course in droves without me doing that. I don't need to do that and hurt my own reputation and not be able to sleep with myself at night. You guys love the course, so tell me in the comment section down below if you do, and if you do, why you do. Anyway, guys, that's going to do it for today's video. I do want to thank each and every single one of you for watching as always, and I will see you guys in the next video. Peace.